Take a look now at how the markets are performing on this day. The local bourse is trading higher while the rand is slightly muted ahead of the medium-term budget policy statement. For a sense of how the markets are trading ahead of this policy statement, we're joined now by Mr. Maurice Madiba, the CEO of Cloud Atlas. Mr. Madiba, good to have you with us on the daytime update. Now, when we take a look at the rand, it reached a low of 15 rand 48 against the US dollar in intraday trade as load shedding added to the pressure on the currency. Will the minister's midterm budget policy statement be overshadowed by this global sentiment?
Yes, good afternoon, Tammy, to yourself and your viewers, and thanks for having me. We are in some unprecedented times in terms of what's happening globally. Seeing that South Africa is an emerging market, and we've just come out of, we emerged from coronavirus to a large extent. I think the worst of the pandemic is behind us. But where that's left us in relation to the developed world is that you are finding the U.S. has quite a higher rate of inflation this year around than what we have had as South Africa. And so while the economy may be opening up and showing a little bit of signs of growth, which has triggered some tapering, South Africa still has somewhat of low inflation, and so we're not expecting to hike our interest rates anytime soon. But what that's created is the capital flow of money is now seeing investors potentially pulling out of South Africa's yielding assets just to look for yield elsewhere in this low interest rate environment that we may find ourselves in the next 2 to 3 years.
Now, analysts seem to be in agreement that the minister will have to juggle debt reduction on one end and spending on the other. What do you believe are the three things that the minister simply cannot avoid this afternoon?
So to put it into perspective, I think that the first thing the minister can't avoid is continuing with the policy of the prior finance minister. And it's always difficult inheriting a national treasury in a state where you have to continue policies which you didn't or were not a part of actually establishing firmly. But fiscal consolidation is going to be one of the main things, reducing our budget deficit. The other thing that he cannot avoid in this address is that it's going to get worse before it gets better. So we may find budget deficits widening a little bit and us having to borrow both domestically and internationally for up until probably 2023, 2024. But then from there, the idea is that we've borrowed enough so our debt to GDP may reach the 80% mark and then start to pull back after that, and we may even see a budget surplus starting to emerge in the 2024-2025 financial year for the government. So those are the two things up front. And the third thing, which is more critical, is going to be the wage bill. The public sector wage bill is exceptionally high. Earlier on the station, we saw the numbers that it was sitting at 130 billion back in 2008. It's well in excess of 600 billion now. So even though we get good taxes, and collection of taxes at this stage, and the economy is showing signs of growth, those are three unavoidable things. And if I add 3.1, it's just about us getting onto a better credit rating so that we can potentially get better debt or better price debt in the markets.
Now, investors will be looking to the former labor unionist for concrete steps to lower debt and to reduce the country's fiscal deficits. What kind of action will give them encouragement in this regard?
So I think that, you cannot avoid the fact that we do need to borrow a little bit more. What has helped South Africa is we've had a mini boom in terms of commodities, which has really helped our current account in terms of being able to reduce that deficit. As a unionist and a labor unionist, you would find that there is a view of wanting to maintain the public sector wage bill and also provide the increases. So we only saw the government increases start to kick in the past year, and they were a lot less than what the unions were pushing for. But we are in a situation where, with the pandemic, a lot of your developed counterparts and emerging market counterparts have borrowed significantly to deal with this pandemic. whereas South Africa has not tapped into the debt as much as they could have or as much as they should have to deal with coronavirus. And so our growth may be sluggish, but it is starting to show signs of being a bit more upbeat going into the next financial year. And that's just something that the unions will have to contend with, that things are a little bit tight at this stage. So getting wage increases is unlikely to happen. But at the same time, we benefit by not having to increase our taxes or other forms of physical austerity that may not be desirable for our economy to grow.
Mr. Maurice Madiba, thank you very much for today's market update. He is CEO of Cloud Atlas.